A lot of people would think that an investment, if you've had it for over a year, is long-term capital gains, which would be capped at 20% taxation if you're in the highest bracket. For most people, it's 15%. But gold and silver are actually collectibles.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And in today's show, we're going to talk about a part of the gold and silver process that is not mentioned quite as often, but is pretty darn important, and that is the tax implications that go along with investing in gold and silver. And fortunately, here to join me today is Nathan Wilson and Amanda Lehmann of Independence Money, who fortunately I had the pleasure to run into at the Silver Symposium. They gave a great presentation there and laid things out clearly. So it's a pleasure to have you both on the show today, and welcome on in. And how are both of you doing?
We're doing great. How are you doing?
Doing well here. And Nathan, it's nice to have you on as well. And perhaps before we dig in, maybe you could just let folks know a bit about your background. Obviously, we want everyone to consult their accountant and legal tax professionals, but perhaps you could just let people know what it is that you do so they're clear the perspective you're coming from, and then we'll dig into some of the questions from there.
Sure. Thanks, Chris, for hosting this. Appreciate being able to reach your audience on some tax conversations. So Amanda and I manage Independence Money. We do dollar diversification strategies like you do as well. We talk about international real estate, asset protection, but really our main niche is tax strategies. And that's really my background is I have a postgraduate designation called a certified tax specialist, and also a second one called certified estate and trust specialist. I think the tax one is the most important because there's like 2 million people that work in the tax industry. Less than 1% of them have earned the certified tax specialist. So we usually teach people how to protect assets and income from the theft of taxation.
Yes, which is certainly something that is on people's minds these days, not getting any simpler. And later on, we'll dig into the new bill that is going around in Congress. Although perhaps just to start, can you give people the basics of how gold and silver are treated from a tax standpoint, how that's reported, and what they should be aware of there?
Yeah, sure. So a lot of people would think that an investment, if you've had it for over a year, is long-term capital gains, which would be capped at 20% taxation if you're in the highest bracket. For most people, it's 15%. But gold and silver are actually collectibles. So that's actually a flat tax of 28%, which is pretty high considering.
Okay, and basically, does that matter any time horizon, or just no matter what, if you have gains, you're looking at that 28% rate?
Well, if you held them over a year, but it defaults to short term, if you held less than a year, and that would be treated as your ordinary income tax rate, which ironically for a lot of investors would be lower than the collectibles tax rate, which is a flat 28%. And I actually wrote for the Morgan Report with David Morgan on this topic, because it's worse. There's not even any kind of exchanges, like to like exchanges. Sometimes your taxes are deferred. So switching from, say, bars to, from coins to bars, for example, or gold to silver, anytime there's a transaction, you have to book that taxation. And so unless we're talking less than a year, it's a flat 28% on federal. And then if you're in a state, that is a state tax. And then if you're a high income earner, which is what, around $250,000, then you pick up the 3.8% Obamacare tax. So they really sock it to the physical market with that tax code.
Yeah, certainly not ideal, especially with people trying to hedge against the inflation, which we have finally seen arrive in full force this year. Although you mentioned the like-to-like exchanges, and again, a lot of people have been doing gold to silver swaps. Are both of those creating a new taxable event, or how is that treated?
Correct. It's anytime you sell, it's almost like a stock. As soon as you sell it, that's the transaction.
And in terms of options that are available to lessen that burden, I know at the symposium and on your channel, you've talked about the IRA, the Roth IRA, and of course, there's also the 401k options. Could you walk through some of the at least options that are available to make this a little bit better in the long term?
Yeah, sure. So a lot of people don't know that in either in your 401k or your Roth that you can purchase anything other than stocks, bonds, and mutual funds. You can buy precious metals, you can buy real estate, you can buy kind of anything you want to invest in. So when you're buying inside the IRA, any transaction is not a taxable transaction. The only thing that's the taxable transaction on your traditional IRA is any distributions you might take, which hopefully is after you're 59 and a half, so that you don't have the 10% penalty. So that's another topic that we like to educate people on is how to work through that process, get accounts set up with an IRA custodian, and then also educating people on what to buy and where to hold those.
Yeah, there's some very specific rules on it, but I think the average American is going to be less than a 28% tax bracket. So even if you owned them in a tax deferred IRA, and you're over 59 and a half when you take that distribution, chances are your taxes are going to be less than 28%. Of course, if it's in a Roth, that's ideal, especially if the suppression of the silver price ever unwound and it gets priced appropriately. That is the best place to be, is in the Roth, because then you can actually distribute the physical metal to yourself if you ever wanted to at 59 and a half, or you could leave it inside of the Roth, and whatever you sell, you're not paying taxes on whatsoever. And Chris, we talked at this Silver Symposium. We actually gave a presentation on buying physical metals with your retirement account, and with these artificially suppressed spot prices on silver, this would be a great time to do an IRA to Roth conversion, and then maybe use one of our other tax strategies to mitigate or eliminate those taxes on that conversion as well.
And are there particular products that it needs to be when you're doing that type of structure? Is it any specific types of coins or bars, or is it pretty much open to anything that you can get in there?
Well, the IRS, of course, they have their own little tricks that they make. So there we actually have a chart that we could probably pull up. But there's a lot of different gold and silver options that people can buy, but sometimes, if you buy a silver eagle, it might not be the same way on gold that the IRS approves. So it's pretty subjective. So maybe I can try to find that and pull it up. So.
Yeah, certainly interesting. They don't seem to make anything easy in the tax code, especially with the coins. But
yeah, the IRAs, they're just generically retirement codes. IRA, Roth, 401k is kind of all lumped in that conversation. It's really an issue of don'ts. Like, they don't really tell you what you can and can't do. They tell you what you can't do. And as long as you follow those rules, you're okay. So, for example, you can't own it physically in your home. Like, you have to have it segregated in the retirement account from any physical holdings you have personally. It has to be owned in the name of the IRA. And things like that. We actually helped a viewer last week that had taken a distribution from her retirement account, paid taxes and penalty to buy physical, and she just didn't know you could buy physical inside of a retirement account. So first and foremost, we want to save people from unnecessary taxes on busting retirement accounts when they can very well do this legally inside of them. Okay. But yeah, let's take a look at here, the screen share.
Yeah, let me get my screen booted up. So
different bullion dealers are going to have different opinions. The fineness is the actual kind of stated rule, where you have to have that, those 3 9s on silver versus 995 on some gold and 999 on others. But I think 995 is the rules. Obviously, if it goes higher than that, it's more pure, it's fine. But this particular IRS approved IRA custodian is a retired tax attorney, and he actually got granular and listed the names.
Mm-hmm. Like, for example, the Kookaburra coin, you can hold a silver Kookaburra coin in your IRA, but not a gold one. So that's, the little granular details that they get into on this slide.
Okay. And again, you said that can't be something that you're storing at home, has to be a segregated account in a vault storage somewhere.
Yes, exactly. So, kind of the behind the scenes is, like Amanda mentioned, you can buy stocks in your IRA. Everybody knows that. And so what happens is you actually work with a qualified custodian to form an LLC that then your retirement account owns the full stock of that LLC. And at that point, the IRA is kind of behind the scenes. Like you can call a bullion dealer and buy these in the name of your LLC owned IRA, and they don't necessarily have to know it's an IRA. But the IRS is very specific. You can't have those shipped to your home. You can't have those in personal custody. You have to have them in the name of that LLC owned by your IRA in a vault. So let's say you already have an account with that vault custodian with personal held metals in it. You can't put your IRA metals in the same box. They need to be in a separate account, even if they're at the same vault.
Okay. And if someone has coins that unfortunately are not on that list, is there anything available there, or are they basically just looking at that 28% rate and not much else that can be done?
Well, unless they've been stacking for a couple of decades here, it might behoove them to go ahead and sell the physical that they own personal and book whatever applicable taxes while the prices are still suppressed. And then assuming they have liquidity in their retirement accounts, rebuying those inside of that structure to protect them from future taxation. But we have lots of tax strategies, for people that don't want to pay that unrealized capital gains tax, whether it's metals or stocks or crypto or real estate. We have strategies to mitigate or eliminate that unrealized capital gain anyway.
Yeah, actually, that was something I heard in one of your other interviews I was listening to. Can you talk more about what you mean there with the unrealized tax, which seems to be a bit of a tricky area?
Yeah, I think it's really popular with real estate investors, especially those that have been 1031 exchanging for, we've met people that have been doing that for decades. And now a lot of them have depreciated and you have a zero cost basis, and you might be selling a real estate asset now for over $1 million and having to book unrealized. You'd have an unrealized capital gain now, but it's a lot of investors are not selling because they would have to book that realized capital gains tax, which could be upwards of 20%. And then you might also bump into state and the Obamacare tax, the net investment tax, which is a flat 3.8% tax. So for some people, you might be paying upwards of 30%.
Okay. And especially, Nathan, you mentioned we do have lower metals prices. So any thoughts on the tax implications? Is this advantageous for people to be looking into now while you would have a recognized loss, or any thoughts on that?
Yeah, I mean, again, if you're a little underwater because you're kind of new to stacking and you have liquidity in a retirement account, you can certainly reach out to us. Our email is team@independence-money.com. Don't forget the dash. We do offer complimentary consultations for the first half hour or so, and we could work on some of those strategies on getting that set up and getting those metals repurchased. I like the idea of owning metals in a Roth. I mean, we know that all investments have expenses, even if it's just, paying the vaulting requirement, right? There's still an expense there. But our position, our taxes are by far and wide the highest expense, no matter what investment you own. I think we did some math on this.
Yeah.
We can show you.
I think it's especially if you think prices are really going to go up. This strategy and doing it in your self-directed IRA is really the best way, because in this example, let's say you have $100,000 in silver at $20 an ounce right now, and you have 5,000 ounces. Well, if you think that's going to go to $300, which we heard a lot at the Silver Symposium, so that would then bring you to 1.5 million. So that's a really big capital gains. And of course, you're going to be trying to sell that when you get into those prices. So doing this in a self-directed IRA would save you hundreds of thousands of dollars in taxes.
Yeah, I think David Morgan actually did that math. He said, they started doctoring CPI back in, I think, 1982. They took out food and energy and housing. Well, that's like our most expensive bills, is the gas pump and our rent or mortgage or whatnot. And so they've been doctoring CPI, as everybody's aware of. So if you just applied the pre-doctored CPI to the price of silver going back, I think 1980 is the starting point I think he used, he came up to just having CPI applied to the price of silver, it would be $300 an ounce in today's dollars. So it's certainly one of the cheapest commodities out there. And of course, you're the bigger expert on metal forecasting. We're here to just save your viewers a bunch of taxes.
Yeah, certainly that would be nice to imagine. $300 silver, quite a bit of ways away from there at the moment. Although, again, with perhaps the money that is expected to be printed going forward, we'd have a lot of that already. Although, interesting the diversion we've had with recent Fed rate hikes, but we'll see how silver keeps up going forward in the future. One other question I had for you guys is that, especially with some of the policies, we've just lived through a lockdown era. A lot of people have been moving abroad. What options are available if people are outside of the country, whether they have, another citizenship or not? But does that change the metals programs or options that could be available from a tax perspective?
Well, America is the only developed country that taxes you on worldwide income. I think we actually did a video on our YouTube channel. You could find us on Independence Money. We actually did a video called The IRS Owns You. So they literally want to, get your income tax on any money you make anywhere in the world. So unless somebody's willing to drop their US citizenship, using another legal tax strategy that we can consult, viewers on would be your only option for avoiding taxes on the metals. But there is a nice little caveat in the Internal Revenue Code for those that want to put in some serious time overseas in a given calendar year.
Yeah, it's called the Foreign Income Exclusion Credit. So you can, as a couple, you can make up to $250,000 and not be taxed in the US or in that country. It only applies to certain countries. For example, one of them would be Nicaragua. So if you're willing to get your permanent residency there, which is usually if you're living there for more than 6 months, if you're willing to do that, like for say, if you have an online business, that could be a great way to save a lot of money on taxes.
Okay, and that is 6 months is the threshold there?
That's the minimum for ongoing, but this is something the IRS is going to question and scrutinize. And so our tax attorney kind of advised like that first year, you need to be pushing like 9. And then maybe, the second year, maybe it's 8, the bare minimum 6. But if you're just barely trying to squeak over and it's the first year you're doing this, they're probably going to throw it out. And it's pretty specific. Like you need to declare that as your residence. You need to obviously be paying rent down there or own real estate. He also recommends you probably need to get a driver's license. Like it needs to be, validated. But yeah, if you're getting paid by a international LLC, so take your business, for example, you could form, if it's a domestic LLC, you could form an international LLC that pays you while you're living abroad. And then those wages would be excluded from federal and state taxes if you live in a state that taxes you here in the US. And then if your home country has a territorial tax system, meaning they don't charge, they don't tax you on earnings outside of their borders, then there you go. It's a perfect little mousetrap.
Yeah, every time we go down there, we meet a ton of Americans, Canadians, Australians, all living down there full time, just escaping everything that happened in 2020. And a lot of them have their own businesses or just work online for a corporation. And seems like they're living a really good life down there.
Generation Zoom.
Yeah, it's interesting. In a time, it's a little bit over a year that I've been down here, and certainly a lot of Americans, Canadians coming down here. And I get several emails asking people asking me how to various questions of living in Mexico. So I think that will be helpful for folks. Actually, one last thing I did want to ask. I know that there's different reporting requirements if you do a bullion order, whether it's above or below $10,000, and perhaps you could just explain that for people.
Yeah, I don't know that is a hard and fast rule. I know certain like the local dealer, he doesn't want to do anything above that. But I've heard of other even domestic bullion dealers that don't report that because it's treated as personal property. It's not an account. It's not a financial account. And that's the part of the code that pertains to that, reporting is financial accounts. So like, for example, if you bought from an overseas bullion dealer, there's no reporting to the US whatsoever. And I think, especially if you're going to hold it in your home, privacy is paramount there for sure. One thing you mentioned, it's perfectly legal to fly with your metals. We're actually going to do that in November when we're going to go do a tax episode in the Caymans, one of the Cayman vaults there. We're going to actually fly with metals. So find
take your 1,000-ounce bar in the plane.
Yeah, they're going to pull you back to the back room, and there's some things you need to be able to say, but it's perfectly legal. It's considered personal property. The big trick is to make sure that the country you're going into doesn't have a value-added tax. So, for example, Cayman does not, where Nicaragua would. I would not fly with metals to Nicaragua, although we do own real estate there.
Yeah. So we'll be doing that episode in November, probably midway through November. So that's going to be a fun episode, and we're going to document the whole process.
Well, that sounds good. And again, I know you guys have a webinar coming up tomorrow, which is going to be digging into some more of the options. And perhaps you could just let folks know a bit about that and where they can find you. Obviously, we're talking to a lot of people today, so none of this is specific tax, accounting advice, but if they do want to follow up to get more personalized attention, if you could mention where to find you and the webinar you're doing.
Yeah, perfect. So it's going to be September 22nd at 5 p.m. Eastern. We're going to put the link in the description so you can click on that and register for it. We're going to be talking a lot about that large unrealized capital gains that you were mentioning. We do a lot of that for real estate investors that have been 1031ing, and then a lot about international real estate, specifically in Central America. But I think these are some of the large talking points we're going to be talking about is the problem, which you mentioned, the upcoming budget proposal in 2023. They're voting on that, I think, October 1st. So there's some nasty things in there that they've slid in that might be passing.
Yeah, and I might mention this isn't a law that we need partisan, not bipartisan approval to get through. This is the budget proposal that they have to approve every single year, or the country, doesn't have any money to operate anymore. Now, what passes, we don't know, but it's got some nasty stuff in it, like ending the step up in cost basis at death, which is currently part of our code, expanding the Obamacare tax into small businesses, and then for, quote, rich Americans, which starts at, I think, what, 170 grand or so.
Single, and then, like 343 filing jointly.
Yeah, they're looking at taking capital gains to be taxed at ordinary tax rates. So, specifically for real estate investors that have been deferring for a really long time, this is a webinar you need to be on. And we're going to have the link, I think, in your channel. And then we're going to talk about international real estate. We work with a developer that actually accepts precious metals. So I always kind of joke, like, if silver was to rally to, the $100 an ounce or whatever the case, what are you going to buy with it? You can't eat it. It doesn't keep the rain off your head. So, real estate's obviously a good alternative. And this developer literally has an account at Delaware Depository. So you ship the metals to them and they'll build you a beach house in some beautiful location. I think they work with Nicaragua, Belize, Costa Rica, and Panama currently. So it might be something fun to kind of stay in tune with.
Well, that sounds good. And like you mentioned, we will have the link in the description field below. And I guess just in wrapping up, can you let folks know how they can find you on the web if they'd like to get in contact and get more information?
Yeah, you can always email us at team@independence-money.com. And then our website is independence-money.com. And you got it up right there.
And you can find us on Rumble and YouTube under Independence Money. And I think we just got our first podcast channel opened up as well. So covered multiple platforms in case we get deplatformed one of these days.
Well, I appreciate what you guys are doing out there. Obviously, the tax issue is always a complex one. Unfortunately, it doesn't seem to be getting any simpler, but good to have you on here today and at least provide some insight for the metals and the options that are available. And again, hopefully people can find you and log into the webinar tomorrow.
Perfect. Well, thanks so much for your time, and look forward to you updating our viewers on some of your metal expertise in the near future as well, Chris.
Well, that sounds good. It was a pleasure to meet you guys in Spokane and appreciate you stopping by today. Well, thank you to Nathan and Amanda. Hopefully you found that one helpful, and certainly I encourage you to join them on their webinar tomorrow, of which the link is in the description field below. And real quick before we wrap up, we'd like to thank First Majestic Silver for bringing us this video. Had some results out from First Majestic a couple of weeks ago where they intersected 19.35 grams per ton gold over 23.2 meters in their Jarrett Canyon project. In addition, they did find the presence of a high-grade pot of gold mineralization, which they are planning to begin extracting in October, which would push the amount of fresh ore production at Jarrett Canyon to over 3,000 tons per day by the end of 2022. So congratulations to First Majestic. And again, thank you for bringing us this video. Hope you're having a great day out there, and I will see you again tomorrow.